About 5 months ago, I put out a video where Abaxx Technologies was one of the companies discussed called Investing at Inflection Points, in which I talked about how the company was closing in on one of their own. While a little late, the news we have out of Abaxx today is an inflection point for the business, a major milestone that marks some tangible progress toward the launch of their commodity futures exchange in Singapore. News that investors in Abaxx have been waiting for since February when negotiations with strategic partners began. The goal of this process was to fund Abaxx Technologies to a sufficient level so they could receive both their regulated market operator and automated clearinghouse licenses from the Monetary Authority of Singapore. At that point, Abaxx would be in the clear to launch their exchange and bring LNG, carbon, and nickel commodity futures to markets that seemingly need them and need them fast. So make no mistake, this is fantastic news for the company, even if the market reaction today is going to be pretty lackluster. Moving into the press release here, Abaxx is announcing a 27 million Canadian financing to complete their RMO and ACH license requirements. And they're terminating the ATM program that they had in place to keep the company afloat through some low-level dilution until they finalize these terms. As you can see, Abaxx has entered a binding term sheet with an unnamed strategic investor, offering 4.7 million shares at a price of $5.75 Canadian, which is at a discount to the current share price of around $7 Canadian currently, which can be expected because the company didn't exactly have a lot of leverage in these negotiating processes at the moment, and we needed these investors a lot more than they need us. But in total, we're raising 27 million, and this lead strategic investor will make up the bulk of the offering at $20.5 million. The offering can be increased by another 6.5 million Canadian, so in total, the maximum level of dilution that we could see is around 5.8 million shares. And this is a change of plans compared to where we were trying to raise this money. Previously, the plan was to dilute at the exchange level, which is a subsidiary to Abaxx Technologies, so public shareholders wouldn't have been diluted in that scenario. Our ownership stake in the exchange would have been. Now with Plan B here, we're diluting the public company, so shareholders will see around 20 to 25% dilution probably, so relatively significant. Since as of October 10th, the company had around 25.5 million shares outstanding. Now we could be sitting at around 31 million shares outstanding when this is all said and done. So I'm pretty desensitized to dilution from my time investing in mining stocks, which dilute constantly, so I have to remind myself that this is actually something to take note of, so, but either way, this is a net positive for the company, as this was the last significant hurdle to launch the exchange. On the flip side, because we're at Plan B, which is using funding at a public company level, this means that we can maintain a higher level of ownership in the exchange, potentially around 80%. It was expected that we would be at around 60 or 70% if we raised all this money at the exchange level, so public investors will own more of the exchange. A bit of a trade-off there. A minimum of around 7 million Canadian will also be raised at the Abaxx Singapore level, aka the exchange level, so this means that the first strategic investor that was discussed previously is still involved, since that was at an exchange level. And given the wording in this press release back in September, the first investor was likely CBOE, who is certainly a leading global market infrastructure operator that Abaxx has clear ties to. But we don't have true confirmation that it is the CBOE, so take that with a grain of salt. It's still up in the air who all the investors are at the Abaxx Tech level, the parent company, and the exchange level as well. And the question on everyone's mind is, who is this lead strategic investor subscribing to this financing for around $20 million? So given Josh's comments on X, it could be interpreted that this investor is Robert Friedland, the billionaire mining tycoon who's already invested in Abaxx Tech, but it could also be an entirely new investor. Yet again, take any interpretations and speculation with a grain of salt here. Now, I'm assuming most shareholders would love to hear that the Saudis are getting involved, but there's a good chance that they'll trade on the exchange either way. At this point, we'll just take getting the thing launched. So we can only hope that they have some large players in the commodity space on board, and they already announced that there are 43 companies signaling their intent to trade Abaxx products. But we'll see what happens when the financing is closed and licenses are acquired. At that point, the company will disclose who they're actually working with. So at this point, the question is, what's left to finish to get the show on the road? Well, for one, there is no closing date mentioned in this press release, so we can only hope that this financing closes shortly, but Abaxx has been known to see delays so far, so, we'll see how that goes. And as Abaxx has noted in previous investor calls, the technology at the exchange level has been ready to go for quite some time now. So we mainly just need to get this financing closed out and focus on receiving both regulatory licenses that are needed to launch the exchange. Now, it sounds like we can get that done by the end of the year, but yet again, we'll see how everything plays out. But it seems like we're at the final stages of finally ramping up to revenues now. Thanks for watching.